Analysts sort of passing the details of what you divulged yesterday seem to be most concerned that these credit loss provisions as a result of exposures to the COVID-19 slowdown are too optimistic. Are you making the assumption that this is going to be a V-shaped recovery at a time when most economists are thinking a U-shape may actually be a best case scenario? Is there a concern that these loan loss provisions are not enough?
Well, I think the reality, given this is unprecedented times, is no one's too sure whether it's going to be a V, a U or an L. And what we've given to the marketplace is our assumptions are based around a number of scenarios, but they're quite different scenarios, and left it for the market to think for themselves around, where do they think this will land. What we've been is, I think, quite pragmatic about the fact that this is damaging businesses here in the UK and in New Zealand, which is where our primary operations are. Great support from the government to actually help through, but our view is we're not too sure. Therefore, we've taken, I think, a very decisive action to take on board more capital, to unfortunately reduce the dividend, which I know won't please our retail shareholders, and also take a large economic adjustment of $807 million. So I think prudent moves for very uncertain times. There is no playbook for this, so we just need to make sure the bank's in a very safe and secure position to look after customers.
Well, with regard to the dividend, you've said that it's a balancing act. There's been some remarks that this capital raising was done in part to fund the dividend. Does that mean it's the first part of many? And what sort of conversations are you having with regulators with regard to the issue of dividends?
Well, with the dividend, for us, it's a balancing act. Of course, nobody was happy yesterday. The retail shareholders not happy that their dividends come down. Some parties thought that we should have cut the dividend altogether, so they weren't happy. So I think we must have got to probably the right point in a strange sort of a way. But, our view was that we should raise capital. We'd like to invite our retail shareholders into that capital raise, which we've done. We wanted to make sure that they stayed on the register with us, knowing that this was a dividend-paying stock. So I think we did strike the correct balance yesterday with a 30 cents in the share dividend, a $3 billion capital raise, plus the opportunity for retail investors to come in for $500 million or even greater, should they wish to. So it was a balancing act. And I think we've spent time with the regulators going through what we saw as the economic scenarios and why we thought at this point in time this was the right thing to do, and that we could afford to pay the dividend out at this point in time.
How much have you factored in potentially future conduct bill impairments?
Well, we did take, about a week ago, some additional remediation costs for the work we're doing to put right some of the things that were wrong on remediation for customers. Those increases were taken about 10 days ago. So it wasn't a major increase, but it was showing that we still had work to do there. We're trying to get through that remediation as quickly as we possibly can and get the money back into customers, but some of it's quite detailed. Most of it sits in our wealth business, MLC, but there are a number of remediations going on in the bank, but they're much smaller in the actual dollar size, but large in customer numbers. So we're working our way through those, and we'd like to get them finished as quickly as possible.
Ross, as you operate in this new world of COVID-19, we are now seeing more talk that potentially Australia and New Zealand could actually be opening up to each other, but not to the rest of the world. That we could see travel restrictions for a very long time to come. How are you positioning for a different world after the pandemic is over?
Yeah, well, we've certainly heard the talk of from New Zealand about wanting to open up with Australia. I haven't seen any detail on that whatsoever, or whether Australia's quite ready for that. But we are seeing quite significant changes just in how we operate our business. Prior to this, we could operate with about 5,000 of our colleagues working away from our buildings. Today, we have probably 95% of our colleagues working from home, which is quite a different world. You're seeing cash coming out of the system because people don't want to touch it. And they're all using their cards. and avoiding cash both at a merchant level and customers. So you're seeing some quite dramatic shifts in customer behaviour as well as how we operate with our colleagues at work. And I think this will impact, I think in many cases, positively going forward as we move more and more towards a more digital operation. But, we're having to work with our customers to make sure they're looked after. But, there are a lot of things that won't change. And that's the relationships we have with our customers, I think, are being very strongly built, particularly at the business level, as we have very strong communication with them to help them through what's going on here.
Ross, how much underperformance are you seeing in the loan book? And is there a situation where we would potentially be looking at these NPLs being spun off into a bad bank? Are these conversations being held with the government?
No conversations with the government or the regulator of taking those sorts of actions. So we took an economic adjustment of $807 million as part of the results. We won't really see the impairments losses coming through for, I suspect, another 5 or 6 months, and more likely to be in next financial year, because we've given tens of thousands of customers, both personal and business customers, the opportunity to take a principal and interest holiday while they're without income or having reduced income. And it will really be when we get back to having the conversation about how do you start making these payments again, we'll see whether they're in a reasonably good shape or not. Again, can I say the work that the government's done around programs like the JobKeeper will be helpful there for those customers to keep income in their pockets while their employers keep them employed. So I think we've got another probably 5 or 6 months before we'll really understand the true impact. But the economic factors show that this will be a tough period of time. And that's shown through in what we've done with our assessments of the market and some of the scenarios we've run. So we all need to make sure that both business, government, and our regulators and all parties are actually working very strongly together to get this economy moving again.
Ross, around half of your shareholders are retail investors who are really getting badly hit. You're also very exposed to small and mid-sized businesses. I'm wondering, after the financial misconduct Royal Commission, after a terrible start to the year with the bushfires, do you think this is a chance for NAB and for the broader big banking sector in Australia to rehabilitate their reputations?
Look, it brings back the real purpose of a bank, and we are here to work with our customers and help the communities we operate and prosper. We're certainly seeing a difficult time for our shareholders at the moment with dividends being cut. It's a reflection of the business, and we're a reflection of the economies that we operate in. For SMEs, we've reached out to just tens of thousands of them, as I said, to work with them to get them in a good position, because we're making the assumption a good business going into this uncertain time will still be a good business coming out. But there'll be many businesses that were struggling before that we have to be very careful we don't lend them more money that they won't be able to pay back. So a good bank that we've got here, we've got good businesses, and it's very clear from our strategic work, we just need to execute a lot better. But I have full confidence in this bank in the future, and we're showing this throughout this time dealing with customers. And it really does bring the real purpose of a bank, which I think both the government and the communities are seeing us working well together on.